Gold just broke through some huge overhead resistance that you can see right here on the chart. But is it time for you to be adding this very shiny asset to your portfolio? Well, let's take a look at it. So, first thing to look at here is this area, this order block, this outlier block has been here since April. How many days has that been here? One thing that we've been measuring in updating my new trading plan is if a order block is older than 120 days, that is one to be avoided. Like if it runs up and hits that order block, it's one to be avoided. Now, this one here is at 130 days and it just crashed right through it. That's what you're looking for, Joe, right? When you're looking for a stock and you can see resistance finally break through, resistance normally turns into support, which is really cool, right? So imagine that if you are a gold bug and you see it break through this point, this level right here around 315 on GLD, this could be a new support point if it doesn't crash back down through it. But also at the same time, I have traded gold many, many times where it did exactly this, where it popped up. It's like, here we go to the moon, and then immediately crashed right back down. Right. It's happened to me many, many times. So let's continue on with our analysis on GLD. So if we look at GLD's chart inside of Outlier, it does have a buy signal. And let's see, these signals have given 72% return in the last 5 years. So that's pretty good. All of the Outlier 9 is lit up on GLD. So that makes life easy. But let's see, if you were to have entered it, I really would have wanted to enter it back on Tuesday, the 26th. Let me mark that on the chart. That was when the buy signal came through. Oh man, look at that. It's done really well since then. How much is it up since then? About 4.5% so far. I saw somebody, Mikey Mike is trading AGI, which is a gold stock, and he's already rolled up his options. Hey, very nice. The order block party is over. The order block party has ended. It is to the moon at this point, right? We don't know how far it's going to go. Now, Joe, if you were trading this, right, there's a lot that you need to be considering. So one thing is when you see a big move up like this, right? How do we know where to get out? That's a really good question here, right? So I don't expect you to know the answer, but off the top of your head, where would you say, how do we know when to get out?
Well, if I was looking at getting into this today, I'd be curious to see where the 10 EMA is, and I'd probably measure it. And then I would behave as if I did put it on. And I'd say, if I bought right now, where's half ATR from that position? And do I feel comfortable with, with that point? But it's like you said, you're going to be hoping that resistance turns into support because it just went a long way today. And I might be concerned of a snapback.
I would be concerned as well, right? Like if I were looking at this, I would say, I would be keeping my risk in check. And so here's the thing, right? Is that we don't actually know. And as much as, YouTubers on the internet will tell you, oh, buy this now, it can only go up $75 in this stock will turn you into a millionaire by the end of 2025. Right? We don't actually know that. So if you were to get in, a half an ATR is not far, right? It's about a buck and a half, about $1.57 below the current price here on GLD. And one of the things that we've been researching is half an ATR just may be too close. It just may be. So as much as I like keeping my risk in check, in this case, if you were to go all the way down to the 10 EMA, that is significantly farther. Instead of $1.50, that's how far is that? Down to the 10 EMA, it's about $10. Now, Joe, $1.50 versus $10, that's quite a it's quite a princely sum of risk to take there, right? So in this case, if you were going to use a stop that far away, what would you want to do?
I'd want to have a smaller position size than I normally would because otherwise I got a lot of risk out there. Un-
Exactly.
Unless you're our friend Mikey Mike who just rolled and he's already taken risk off the table. He's a lucky man.
So that's 6 times farther than the half ATR if you were to get in when it's $10 away versus $1.57 away, right? 6 times farther. So you can't really say, oh, I would trade this position size regardless, because you're taking 6 times as much risk, right? So this is one of the things that I'm going to be working on in our trading plan is if we are using the 10 EMA stop. I'm not scared of getting into a trade this far away. But I do know that I have to size my trade down bigly. I have to size it down by a factor of 6 in this case. So, you know, that's definitely something we're looking at right now. But let's also take a look at the market overall, right? We still have a SPY with the buy signal. The Q still have buy signal. All the market averages still have buy signals. If we go over here on the ETFs, only XLP, that's materials, I think. Oh, Staples. Staples is the only one with the sell signal. Everything else is still sitting on buys. Now that could change. That could change, right? The market's down about 73 basis points. Looks like it might close under. We got about 5 minutes left in the market today. Might close under the 20-period EMA. Now this has historically been a sell everything signal to me. And I still firmly believe in that. If you've given up the short-term moving average and you're giving up the intermediate-term moving average, we don't really know where that's going to stop. This could just be a bounce and it's going to come right back up, or this could be the start of something worse, right? All, and I repeat this, all crashes, every single crash in the history of time, price closed under the 10 EMA, price closed under the 20 EMA, and price closed under the 50 EMA. Every single crash in the history of time, this happened ahead of time. So you have the choice, not just you, but everybody watching. If you hold on to a trade when the market is closing and breaking down key moving averages here, you might be setting yourself up for a lot of heartache if you don't know where your risk is at, if you're not keeping your risk in check. Let's go into the sectors now. I ran the bookmark. There's a new bookmarklet out. I don't know if you've seen it, 6.1. It looks great. Looks really great. But before we jump into the 6.1 bookmarklet, we can see over here, only communications, healthcare, industrials, and utilities are crossed bearishly on the number of buy signals. Everything else is still crossed bullishly, including the full stocks. However, full stocks, the 2,600 stocks that we cover, it is waning. It is waning, and it might cross back over just tomorrow to get a bearish cross. So, Joe, one of my favorite things to do in a market where we're having sell-offs, in a market where we're having waning breadth, in a market where there's a lot of uncertainty, is to what?
Sit in cash and don't F up.
Sit in cash and don't F up, right? There are an unlimited number of things that you can do in the market every single day, right? You could go out and buy Meta today. You really could. You could go out and you could buy AMD today. You totally could. You could go out and you could buy ESCO today. You totally could. There is a myriad of potential things that you could do today. But remember, when nothing fits your plan, the only thing to do, as only Trends Matter Scott would say, is sit in cash and don't F up, because it can absolutely destroy your portfolio. I was having this conversation with my kids just today. After we get done with this, we'll play the new Sit in Cash and Don't F Up song, and we'll keep it in for the replay. But I was explaining to my kids, like, what does that mean? Like, that's a core principle in trading in the zone, is that there are unlimited opportunities to do unlimited things in the market every single day. And Joe, you're not sitting in the OVTLYR Global. You're not actually sitting in the OVTLYR Global headquarters. So I know it looks like it, but you're not actually there. If you were, you would have me in my DuckTales shirt telling you not to trade something or do trade something, right? You'd have a boss telling you what to do and what not to do. But most of the time, traders have unlimited opportunities to do whatever they want to do.
Mm-hmm.
Because of that, they really screw up. They really screw up. So it's so much easier. It's so much easier to just sit in cash and not screw up your portfolio. So that's what I was trying to tell my children, why that's printed out and hanging out my my library. But it's so true, right? It's so easy to mess up your account. In fact, I remember there was specifically it was a YouTube comment one day. It was a while back before one of these big sell-offs that happened. I remember specifically seeing the comment come through on the live stream, and the guy was like, oh, I got to do something. I can't just sit here and not just do anything. And then, the market like closes way down the next day, and it did bounce off, after that point. But I'm like, why do you have to do anything? You don't have to do anything at all. You can sit in cash and escov, whatever, and just enjoy your portfolio with absolutely no risk on the table. If your plan is not ready, you don't have to do anything, right?
You can just ensure you can ensure that you have the cash to get into the position once it comes to you, instead of just forcing it.
Oh man, forcing trades is one of the biggest rookie mistakes. Yeah, that is super, super common. And in a market like this, right, when all the signals are not lighting up, Even though OVTLYR 9 lit up bigly on GLD, even though you're up bigly on your trades today, that doesn't mean that you need to be going whole hog into the market. You need to make sure that you are taking measured risks, I guess is a way to put it.
Mhm.
So listen, Joe, I don't have a lot to say about this market other than sit in cash and don't F up. But I do have a fantastic new song that we're going to end off with right now. Thanks everybody for coming, and we're going to play the song on the way out.
Check the charts, they're flat as toast. No trend, no spark, no reason to boast. The market sideways, breadth is weak. No setup today, no profits to see. But that itch in my finger says, come on, take a swing. I know where that leads, it's a dangerous thing. Discipline whispers, don't chase, don't bluff. The smartest trade now is to not mess it up. So just sit in cash and don't F up. Let the noise fade down, let your patience fill your cup. The rules are the rules, they're what lift you up. Just sit in cash and don't F up. Could buy S-Gov, let the interest flow while the crowd plays games in a choppy show. I've seen the back test, I know the score. Forcing trades today just lowers returns more. Weeks might go by, that's the test of the game. The payoff comes later, it's always the same. Don't fall for the FOMO, don't call the bluff. The strongest edge is knowing when enough is enough. Just sit in cash and don't F up. It's the hardest move, but it's how you level up. The chart will break out, the waiting is tough. Just sit in cash and don't F up. How long should you wait? As long as it takes. A trend will appear and that's when you stake. So smile, sip your coffee, let the market shake. The best risk is the one you don't have to take. Just sit in cash and don't F up. Let the market run its circles, we won't chase the muck. When the setup is right, we'll be strong enough. Till then, sit in cash and don't F up.
Dude, that was so sick, wasn't it? That was so good.
That's a great song.
All right. You guys have a fantastic day. We will definitely talk soon. But listen, if you want to save time, make money, start winning with less risk, Joe, what should they do?
Hit one of these videos.
Video. See y'all later.